Good afternoon, everyone, and thank you for joining us today for Tips to Increase Profits. I'm Rebecca Chauncey, a business advisor here at the Illinois Small Business Development Center, or SBDC, at Phil Bronzeville. So happy to have you join us. This training is brought to you at no cost because it's funded in part through a cooperative agreement with the United States Small Business Administration, or the USSBA, the Illinois Department of Commerce and Economic Opportunity, and the Urban Juncture Foundation. So I am truly pleased to introduce you to today's presenter. Before I do, just a quick housekeeping note. If you have questions today, please type them in the Q&A section, which you will see at the bottom of your screen. So if you hover at the bottom of your screen, you'll see Q&A. Type your questions there. If the question is relevant in the moment, I will share them with our presenter. And there will also be time at the end of the presentation for additional questions and answers. So without further ado, I am going to pass the mic on, if you will, to our presenter, Mike Thompson of Schooley Mitchell, so you can get tips to increase profit.
Thank you, Rebecca, and thank you all for joining. Time is precious, and the fact that you've chosen to use some of your time to be with myself to hear what I have to share is truly appreciated. And I also want to thank Urban Juncture Foundation and SBDC for the opportunity to assist in your cause to help businesses. So my name is Mike Thompson, and I want to say at the outset, so the title of today's presentation is Tips to Improve Profits. And that is what I will be addressing. But the strategy that I employ and where my expertise lies is in respect to improving profits through expense reduction. Most people equate profitability with more sales, more growth, more top line revenue. And certainly that does apply. But my mantra for business owners, and this applies to personal finance as well, is it's not about what you make, it's about what you keep. So helping businesses to keep more of their money is really what I do. That's my expertise and my business model. You see a lot of people walking around with a lot of bling, driving a nice car, wearing the finest designer labels. And a lot of the times, those people, their net worth is what they're walking around or riding around in. So, and again, each of those are depreciating assets. So it's not about what you make, it's about what you keep. So with that mindset, I'll move forward with the content, but a little more about my background. So I worked in banking for multiple banking institutions for the last 30 years. And I really do enjoy the opportunity now to run my own business and operate on my own terms. But the banking background certainly did give me a good exposure experience in financial services. During that time, I came across a lot of struggling businesses who had difficulty in meeting payroll or in staying solvent. And that did impact me. And so I'm pleased now to be in a position to help those same types of businesses to stay afloat by keeping an eye on the bottom line, by watching what's going out the door, accounts payable, expenses, and helping to reduce those expenses, because more often than not, businesses are paying more than they should. So again, I do have an MBE as a minority business enterprise. It's also considered BPE as well in Illinois. So if you don't have that, I do encourage you to get that certification. It has been an asset I've found. So certainly valuable and worth your time in pursuing it. In terms of Schooley Mitchell, so that is the enterprise that I operate within. And our expertise is in cost management. So we work with businesses to reduce their costs with vendors. Been the operation has been in place for over 20 years. Uh, Worked with over 27,000 clients. Over our 20-year history, our average client savings is between 25 to 35%. And we operate on a contingency model, which means that there is no out-of-pocket expense whatsoever for our services. There's no retainer, there's no hourly fee. Our fees come out of the actual savings that we deliver for our clients. So particularly for clients that have cash flow concerns, ours is an ideal solution. So I said it earlier, I'm going to say it again. And really, if there's nothing else that you get from this presentation, if you remember no other content, then please remember this one slide. It's not about what you make, it's about what you keep. As I said, that applies to personal finance as well as business finance. We've all heard of a lot of people who have won the lottery, and in a couple of years, they're filing for bankruptcy because their spending habits or their financial acumen about how to manage money is not trained, and so they get into some bad habits, and next thing you know, the money's gone. So it's great when businesses are doing great in terms of sales. I often talk with people in a financial capacity, such as fractional CFOs or bookkeepers or CPAs. And so they're working with business owners who are feeling really good about their business because sales are up, record growth. But it's someone in a financial capacity who can say, hey, Mr. or Mrs. Business Owner, yeah, you're right, sales are great, but your expenses are increasing at a rate that's higher than your revenues. So we need to do something about cost containment and expense controls. And so that's how I get introduced into businesses and ultimately create new clients. And this is another model that kind of speaks to that same messaging about the importance of expense controls and how cost savings impact the bottom line. So, and the challenges today, many businesses are dealing with higher costs and tight management of budgets. There still is supply chain concerns. Inflation is still high. It has been going down lately, but relatively speaking, it is a big impact for businesses. And staffing challenges. It's far more costly for new hires as well as retention. And so, the ways that businesses can address that, taking out a loan or increasing debt, that is one option. It can be an expensive option depending on the type of financing you're looking at, or getting more sales, increasing top line revenue. And that can be challenging for a variety of reasons as well. And reducing costs, when most businesses think about reducing costs, they think about cutting staff or cutting departments such as marketing, advertising. But those are essential services. So what we encourage businesses to do is to match services to needs and take a closer look at their rate plans and negotiate better rates with vendors. And that, again, is the key way that we encourage businesses to look at their bottom line and really create a cost-saving mindset. It's a behavior that is learned, but once it's applied consistently, repetitively, then every time you're paying out an invoice to a vendor, you're thinking about how I can reduce the cost here, and that's what we're trying to encourage. So in terms of the bottom line impact, let's say, for instance, if a business gets new sales, $100,000 in new sales, that's great. Let's say their profit margin is 10%. That means that 10% or $10,000 of that $100,000 in new sales goes to the bottom line. And again, that's great. But that same business, if they apply some time and knowledge to reducing their costs, if they reduce their costs by $10,000, that goes directly to the bottom line. It doesn't go through their margins. Um, so that's what I try to illustrate to business owners is that cost savings go directly to your bottom line, unlike new sales. So this again highlights the value of cost savings and how it has direct bottom line impact. So I realize that people on the line may have different experience levels or academic levels. And so some of what I may be covering here may be very basic for you, but for other people on the line, this may be enlightening. So I'll ask for your patience if this is just something that's being reviewed, but I'm happy to go into greater detail for anyone where this may be a new material. But there are basic expense types, fixed expenses. So these are expenses that are consistent and typically the same amount on a month-to-month basis. So that could be your rent or your mortgage, insurance. And there's a long list of other types of fixed costs that businesses incur. So these are predictable, and you tend to budget for that, knowing it's going to be a stable dollar amount. And there's also variable expense types. So this is typically a function of your productivity. So if you are in a manufacturing business, then the number of units that you manufacture is going to be a direct correlation between your costs from a variable standpoint. So this could be your supply costs, or your labor costs, or any other variable that is a function of how much you produce. There's also operational costs. So like shipping is an example of that. For every product that you produce, if you're in an e-commerce business and you got to have it shipped. So shipping is an example of another operational expense. And if there's a need to find out more detail about these expense types, this link at the bottom is a site that gives you further information that can be a good resource for you. Knowledge is power. Again, that concept has broad application, a universal correlation there. So what I'm really going to be sharing with you is knowledge that you can apply to running your business and reducing costs and improving profitability. So here's just a few examples of some basic information regarding some common expense types that may be applicable for you. So in terms of utilities, so we're talking about for people who live in the Chicagoland area, ComEd may be your electrical supplier, or People's Gas could be your supplier for natural gas. So in Illinois, Illinois is a deregulated state for both gas as well as electricity. What that means is that you have an option in terms of who you use as a supplier. So, for example, with ComEd, if ComEd is your distributor, then they have the infrastructure in place to deliver electricity to your home, your municipality, or your subdivision, wherever it gets paid at. So, so there really is no option in terms of who is the delivery source, but you do have an option in terms of the supplier. So if you look at your ComEd or your People's Gas bill or whatever is the provider for that utility for you, you'll see where there is a line item for supplier. So you have an option of which supplier that you use, and you can shop the marketplace to find out who is the lower cost supplier that services, that works with that carrier. So it may take some time, but it is time that can have a good return on investment because you can reduce your costs significantly by choosing a lower cost supplier for utilities. For merchant services, for any businesses that accept credit or debit cards for your product or service, then you're paying a significant amount to a credit card processor who is responsible for um, providing some type of authorization device. Maybe it's a dial terminal that sits at your point of sale. Maybe your e-commerce business, so you have a checkout system or a shopping cart system online. So they provide the ability for you to authorize and accept credit card as payment, and they will conduct the settlement, meaning that they will deposit the amount of that sale less their fees into your checking account. So, so merchant services is a significant cost for many businesses. But what a lot of businesses are not aware of is there is an ability to reduce your costs there. There was a class action suit which Visa MasterCard settled some years ago. I won't get into the weeds about it, but the outcome was that it allows businesses to charge maybe 3 or 3.5%. That fee will apply to the amount of a product purchase at the point of sale. So you may have seen some smaller mom and pop businesses with a sign saying you'll get hit with a 3% fee for credits for use of a credit card. And that was considered out of compliance for businesses because Visa MasterCard networks had restricted charging at the point of sale for use of their cards. But as I alluded to, legislation has passed that now enables merchants to charge. So if you're not working with a credit card processor who has the ability to apply a surcharge, then you should shop around for one that does, because that's a significant cost that you're paying, and there is a way to reduce it. Another strategy is what they refer to as a cash discount. And basically, what that means is that if someone is paying with cash to purchase your product or service, then there's one charge or one cost that you will apply to them. But if they're paying with credit or debit card, then there's a higher tier that you're going to be charging them. So both strategies result in passing the costs on to the consumer, but there's a different method and there's different rules, different requirements for notification. So your card processor can get into that with you in greater detail. But again, the point I want to make to you is that this is an option you should be inquiring with your card processor about. Shipping.
Pardon me, my quick
Sure.
question for you.
Uh-huh.
Is it important for, or legally, maybe I should phrase it this way, legally, do business owners need to list or have a sign that informs their customers or clients that they will indeed incur the surcharge if they use their credit cards?
Yeah, Rebecca, a requirement is to notify the consumer that there's an additional charge that's being applied to that purchase. So, like I said, there are some businesses that were doing that on their own, and you might see a sign at the register saying 3% charge on all credit card usage. But now that the networks have embraced the concept of surcharging, what they now require is that on the receipt that's printed out, there's a line item there that shows amount of the purchase, whatever tax or fees apply, and then credit card surcharge. So under the new system through Visa MasterCard, they require that it appear on the printed out receipt. So that's the means of notifying. Businesses may also provide that notice by some signage within their store or on their e-commerce website. But yeah, that's a long-winded way of answering your question. There is a requirement to give notice to the consumer.
Okay, thank you. And I brought that up because I've seen reviews on certain businesses' websites because customers were, a couple of customers noted being frustrated and surprised by this additional fee. And so I bring up the point ultimately so that our participants today, of course, they want to maintain good customer service. And so I want them to understand the best way to proceed with that. Certainly wanting them to increase profits through your point, right, of charging those or having the surcharge, but make sure you let your customers or clients know.
That's a great point, Rebecca, and thanks for bringing that up. Um, what it comes down to is really knowing your customer base. So if you're in like a retail environment, B2C, business to consumer, surcharging is more prevalent. So the amount of pushback that you might get as a business owner um, should be minimal, probably on an exception basis, because it's more common now for consumers to see that. Okay, I want to pay with my credit card because I want to get my points, I want to get my miles, or I want to get an extra 30 days in which to pay it. So, there's a benefit to them, a convenience for using a credit card. So it's their decision then, okay, do I want to get hit with an additional 3% to use it? So that's their choice. They could just pull out a debit card, which operates differently. It's lower fees that apply to a debit card, or they can pay with cash. So again, there's agency there on the part of the consumer as to whether I want to use it or not. Or, and here's where knowing your customer and knowing your industry applies. If they can get a comparable good or service across the street, all things being equal, and not have to pay that 3% hit, then yeah, they're going to go to your competitor. So knowing your competition, knowing your marketplace, and how prevalent surcharging is important. So, for example, in B2B situations where it's business to business. So if I'm a manufacturer and I'm purchasing raw goods or supplies from a vendor, and I want to pay with my corporate card, um, that could be a case where that vendor may want to apply a surcharge. But if his competitor will give him the same materials without that hit, then yeah, the manufacturer is going to be smart and shop around and figure out, okay, what is my net cost here and where is my best option? So yeah, you're exactly right, Rebecca. That is an important consideration to know how that surcharge is going to be received by your customer base.
Thanks so much for answering the question.
Certainly. So with shipping, for businesses that provide goods that they also have to ship or fulfill. So it can be an e-commerce site that you operate, or maybe you're working through Amazon, some other platform. If you're, however you're shipping, if you're using Amazon, if you're shipping through FedEx, UPS, United States Postal Service, or any other carrier, each of them do have a delivery guarantee. Excuse me. And that delivery guarantee entails if that parcel is delivered late, even by mere seconds, you are entitled to a 100% refund for the cost of that shipment. So most businesses are not aware of that delivery guarantee. Those that are aware don't have the time or the tools or the wherewithal to submit a claim within the 15-day window, because each of them have the same window, 15 days from the time of shipment, not from the time of delivery, but 15 days from the time of shipment, in which to submit a claim saying that this package arrived late, I'm entitled to 100% refund. So that's why there's a lot of money that companies who ship a high amount of goods through a FedEx or UPS, there's a lot of money that they're leaving on the table, again, because of this delivery guarantee. What our firm has done, though, is we've developed software that automates the claim submission process, and it also tracks packages to flag those that are eligible for the refund, those that have arrived late. So once we set up a client on our system, then they automatically receive credits for eligible refunds into their account. But that's just something to be aware of that most businesses have no clue about. You can get 100% refund for late shipments. So that's something to keep in mind. If you're also paying for waste removal, so again, this may be a manufacturing business, you own the building, and so you're paying for utilities as well as waste removal. It's important to look at line item by line item through whichever waste removal firm that you're working through. Um, in the Chicago marketplace, Flood Brothers, Republic, Groot are larger waste removal firms. Waste Management is the 800-pound gorilla in terms of waste removal. You know, they have a global presence and a high degree of scale. But whatever waste removal company you might be using, it's important to look at your invoice, look at your statement, and go through line item by line item. Oftentimes, either individual business owners or accounts payable departments, whatever gets billed, they pay it. And what we try to encourage people to do is to take the time to look, go over your statement, see if anything is wrong. And this is very common in terms of waste removal. There's several fees that we see clients getting hit with that they don't even realize it. So overage fees. If you have a 6-foot bin that gets emptied once a week, if there's excess trash being thrown into that bin, then you're going to get hit with a sizable overage fee. So it may be a need, in this case, you're under provision, meaning that you may need to expand to an 8-foot bin instead of a 6-foot, or increase the frequency of pickup, maybe instead of once a week, twice a week. However you manage that, that's something that you need to take a look at, because again, you're getting hit with fees that are unnecessary. Also, contamination fees are common. So if you have recyclables, there's a separate bin that you should be putting all recycled waste into. But if you mix into that some other type of waste, such as food waste or some other refuse, oil or some other type of fluid, then you get hit with contamination fees. I just had a client, it's a large nonprofit client. They have multiple locations throughout the Chicagoland area. And when we do our audit, we saw that they were getting hit $175 per location for contamination fees. And long story short, we found out that there was some program that they were doing and in each of their locations, and people were putting food waste into the recycle bin. So in this situation, it was something they would have just paid right out, but because they're our client, and so we review their invoices every month, we went back to the waste removal company and disputed it. And because there's a process, they're supposed to take pictures and provide documentation before they assess that contamination fee. In this case, they didn't. So we were able to get those fees reversed for our client. But also just advise them, perhaps it's a training matter. Maybe you have a new employee. In this case, it was a different program that they were doing. And so once they were aware that there was a cost to them doing that, then they made sure that their employees were aware that throwing this food waste into the recycle bin was a no-no. So we were able to fix that for them. But that's something that you as a business owner, if you are paying for waste removal, you want to keep an eye on. Also, vendor management. You've heard some of these sayings, you have not because you ask not, or a closed mouth don't get fed. Those kind of things that your mother, your grandmother may have shared with you. They call it mother wit, good common sense. Well, that applies in terms of business. If you're working with a vendor for whatever it is, waste removal or shipping or whatever you're paying for, ask for a discount, ask for a rate review, uh, ask for a hookup. Oftentimes, these businesses, particularly if you've been on their system and they've made a fair amount of margin off of your patronage over some years, well, then you shouldn't be scared to ask for some kind of a rate review, some kind of a lowered cost. It's their option to say, no, we're charging you what we think we should charge you, and then it's your option to go out into the marketplace and shop around and see if for that same product or service, if you can get a lower cost for it. Many times you can, but you simply may not ask for it. I recently had an experience where, and I do this for a living, but I just recently learned. I've used, I'm an avid listener of Sirius XM radio. I listen to it every day in the car, and I've had it for years. And I got set up online, and so I never had occasion to talk to a customer service rep or talk to anyone about my account. It came out of my account automatically for years. I don't even think about it. But long story short, I had occasion to talk to a rep some months ago, and they asked me a few questions, my listening habits. And they said, "Oh, well, you should be in a different rate plan. It'll cost you $20 less a month." And so, yeah, I'm happy that I'm $20 richer every month. But I was kicking myself that I didn't take the time to ask, hey, am I paying the lowest I should be paying? That's just a story of my experience to convey to you. Everything that you're paying out, question it and see if there's an opportunity for lower costs, volume discounts or otherwise. Another best practice is to read your contracts. I'm working with a very large homeowners association, and they've been putting off for months working with us because they had some other projects they were working on. So finally, when they were ready to move forward with us and they sent us their contract, we saw that they had just by 30 days missed the window to change waste removal vendors. So what every waste removal company does is they have in their contracts, you have a 90-day notice in which to terminate this agreement. If you don't provide notice within 90 days of end of term, then it automatically rolls over into another 3-year term. So it means you're stuck with them for another 3 years, whether you're happy with them or not. So knowing your contract renewal date gives you, maybe a few months ahead of that time to at least question, okay, am I getting the lowest rate possible? Should I go out for some bids elsewhere? So you have some flexibility as long as you don't fall into that period. For most companies, it's either 60 or 90 days before the end of term that you have to notify them. You have to give them written notice that you're going to change. And typically that's when they'll come back to you and say, well, look, we'll give you a discount if you go ahead and stick with us for another 3 years. But if you don't give them that notice, you're stuck with the same terms under the same price. And I mentioned this earlier about reviewing your statements. Part of what we do when we're auditing vendor statements is looking for errors. You'd be surprised how often we come across billing errors. You probably wouldn't be surprised to know that the vast majority of errors are in the favor of the vendor, not of the client. So, I'm not saying that vendors, operate out of good faith, but it is a fact that these billing errors, more often than not, are in the favor of them. So, it's good to check the billing errors, make sure that what you're being billed is consistent with what is in the agreement that you're under. Also, rate consistency. We sometimes see that there's changes in rates, and depending upon the state where you live or the type of expense category it is, there's different requirements for notification. If they're going to change the rate on you, you're supposed to be notified. Typically, in your statement, it'll say, your rate will increase by X percent or X number of dollars per month. But oftentimes that gets missed. And so you're paying more without realizing it. So again, reviewing your statements is important. I've alluded to some of these already where you're over provisioned. I'll give you an example. So telecom is another area that we work with businesses to reduce their costs in. So like you may have a business with a couple of hundred cellular lines that they're paying for. So we'll do an analysis of those cellular lines and we'll find out that some a certain percentage aren't even being used. So, that's something we bring to the attention of the business. In that case, they're over provisioned. Or also, in terms of being over provisioned, we'll see that there are some lines that they're paying for unlimited data, but it's hardly being used. So they're not even reaching that a high level. So those plans should be switched to a minutes plan because they're paying more for unlimited usage when they really don't need it. They'd be better suited to be more cost efficient to go with a minutes plan. And then we see the exact opposite where they're under provision. We see businesses that are paying for a minutes plan, but they're getting hit with overage charges because they're being used excessively. So, it's really a case of optimizing that category for a customer like that. We'll see those 200 cellular lines. We'll eliminate the ones that aren't being used. The ones that should be on the minutes plan, we'll switch the plan. The ones that should be on an unlimited plan, we'll switch those. And it results in significant savings for our clients. Also, we see businesses that are paying above market rates simply because they're not taking the time to research the marketplace and get competitive bids. So that's something we encourage. I've already spoken to billing errors. Like I said, it is quite common. So take a look at your statements. Here are some other areas where we're seeing examples of being over provisioned. So software licenses. This is something that is really common. So take, for example, if you're paying for Outlook, that there are 15 different plans for Outlook through Microsoft. As low as $9 a month for very basic Outlook email functionality, on up to $59 a month for some of the other features with Outlook that are available. But if you know that there's an employee who only needs email access and they don't need all the other bells and whistles that go along with a more premium Outlook plan, then switch them to the lower costs. That's part of what we do as well is we analyze licenses. Sometimes businesses have hundreds of licenses that are operating within their enterprise. And some of them are expired. Some of them don't match their needs. So that's something that we work with businesses and consult about. Also, some of these they can be shared. So that's something that businesses should take a close look at in terms of their SaaS or software as a service management. Telecom, I kind of spoke to this already, um, uh, but but taking a close look, particularly if you're paying for multiple lines within your business, taking a close look at what you're paying for. Waste removal, I kind of spoke to this already as well, but optimizing that expense, seeing if your pickup schedule or the bin size is optimal for your needs. Under provision, something else that, like in terms of utilities, there is a billing methodology called time of use during versus general service metering. Now, most people, most businesses have general service, so your fee is the same regardless of the time that you use it. But your cost is actually lower in the evening because there's less usage overall within the marketplace. So, for example, with ComEd, there's an opportunity to work with them. If your business uses a high amount of energy, if there's an opportunity to use it in the evening, then you can reduce your costs dramatically by getting time of use metering. Also, there are a multitude of efficiency grants out there. A little bit of research in terms of your eligibility and applicability for some of those opportunities, could result in a grant for you. Telecom, I kind of spoke to this already. Data overages, that is common, and shipping. If you're doing a high volume of shipping, then your carrier should be informing you that there are lower rates you could be paying based on your volume. It's a schedule, it's a tiered schedule. And they can let you know how far away you are from getting the next level of discount. But again, you have to be aware of that and you have to manage it. A lot of businesses simply are not aware. So paying above market rates, again, knowledge is power. And so taking some time to research, and I don't want to be flippant about this. I realize that as a business owner, you're juggling a lot of different responsibilities, competing priorities, managing staff and costs. It can be a lot. And so that's why a lot of businesses simply don't do it. They don't have the time. So really my goal here is just to remind you that some cost savings, spending a little time to manage your costs can be impactful and again, results in direct bottom line benefits. So knowing what your services should actually cost within your marketplace, knowing who to negotiate with, you may have a 1-800 number to call and be on hold for a minute, but oftentimes there's an account rep that would be assigned to your account depending upon how much you use that vendor and the volume levels. But you should know, who is the point person you should be talking to about asking for a re-rate. I spoke to this also about auto renewals. Find out your termination date and how long you have to notify them of the fact that you may want to terminate that agreement. Spoke to price creep already, rate increases without insufficient notification. And also, we live in an age of technological innovation. There's advancements that are happening rapidly, many of which can benefit you from a cost standpoint. Be mindful of new technology that applies to your business and how you can take advantage of it. I spoke to billing errors a little bit, but Sales and use tax. This is something that if you have an accountant, you want to talk to your accountant about, because there's different ways that can manage that, and there could be some tax implications in terms of your tax exposure, depending on how you use that. Build on canceled services. So large organizations may have this because your accounting, that your accounts payable, isn't aligned with your operations, and so they're continuing to pay for services that are not needed or have already been should have been canceled, or being billed not in compliance with a contract. So again, read your contract, understand the terms. I know it's fine print. Sometimes it's a lot to read, but it's worth your time to do that because it can result in cost savings. Something else, if you have multiple employees that are working with you, it's they may not have skin in the game. They may not really be concerned with reducing costs because they're getting paid regardless. And so, giving them some skin in the game or incentivizing them for helping, and there's a lot of different ways to do that. Share in the profits, or a bonus, or employee lunch if costs reduce X amount percent. That's one way to make them mindful of reducing costs, and it can benefit them. Also, in terms of employees and specializing in vendors, outsourcing is another consideration. There's a large amount of like fractional CFOs. Instead of maintaining a CFO in-house and paying a salary, it could be more cost effective to outsource that. Similar with marketing or sales. There's a whole entire industry now, people or resources that can be outsourced for businesses, and this results in far lower costs. Also, having a business community to find out about best practices and reducing costs. If you're active on LinkedIn, LinkedIn has a resource where you can sign up for different communities. So if you're an e-commerce business, you can connect with other e-commerce business owners, and they share best practices. Or they may reach out about a problem that they're having. Someone else may have experienced that problem, so they can provide feedback. So, that's an example of how you can reach out to others to get valuable information. And sometimes we talk with businesses, and some people are just resistant to change, even if it benefits them. But I encourage you to be open to change and be open-minded about other changes that can positively impact you and your bottom line. So wrapping up, as I've shared with you, none of this is really rocket science. All it is really is about doing some homework. If it's your business, if it's your craft, this is your baby, and you should want to take care of it. So spending some time to understand your costs and how to reduce them is something that will certainly benefit you. So that concludes the presentation. I hope you found it of value. So thank you again for your time. I'm happy to entertain any questions.
Thank you so much, Mike. That was a fantastic presentation, and I could tell or sense that people were really taking fantastic notes and great points that they will keep in mind to increase their bottom line. If I don't see any questions in the Q&A section now, but before we end for the day, please raise your hand or type any questions in the Q&A section. If you're in a position where you can't type right now, it's easier to speak. Just raise your hand and I will give you permission to ask the question before we close. Any final questions? All right. Well, as Mike noted, and as you can see here, if you on this final slide, if you're not already a client with us at the Illinois SBDC at Bill Bronzeville, you can become one by signing in the same place that you register for today's training. And also, you can tell other business owners that could benefit from business support. You benefit from trainings like this at no cost, as well as one-on-one advising sessions. You can contact us via email, the website, or phone. But ultimately, note that you will have to sign up to become a client on the website. And then you also have Mike Thompson's information of Schoolie Mitchell of Chicago. So be sure to reach out as needed via email. You can go to the website or give them a call. And then there's the QR code. Please note that you will receive the recording of today's session, and it will include a survey. By all means, we love to get your feedback. We want to provide training that is very valuable and help you to excel in business. So we appreciate your survey feedback, and you can also share potential topics for future training that we can consider. I so appreciate your time and attention. Remember, as Mike said, it's not about what you make, it's about what you keep. And he also noted knowledge is power. I would slightly amend that and say applied knowledge is very powerful, because you can learn all these things, but if you're not applying it, then you're doing yourself a disservice. So apply what he shared, and here's to continued success in business. Thank you all, and thanks again, Mike, for your time and knowledge.
Thank you, Rebecca.
All right, have a great day, everyone.
Bye, everyone.